And I think the point we're making is even in raising that price target, it still implies a lot of the gains are in. And what does the price action this week tell you about how that's playing out?
Look, I think the title of the note was we see a little bit of room left, and that's really the message that we wanted to send. Yes, a little bit more room from what we've already seen, but I think you're right. I think we've priced in a lot of those gains, especially when you think about the economic backdrop this year, the earnings backdrop. Markets anticipated a lot of that. So the question is, where do we go from here? I think the price action today is really interesting. No one can really pinpoint a precise reason for this sell-off. Maybe it's Yellen. Maybe it's the rotation. Maybe it's inflation. I even saw someone saying the weather's nice in New York, so maybe it's because people are wanting to go outside. Right. I think that, it's interesting. I think that we are in the middle now of what is likely going to be the peak in the earnings growth rate. So what do I mean by that? 56% year over year is what the consensus is anticipating right now, but it's only anticipating 21% for the third quarter, and I think 16% for the fourth quarter. So what happens to markets when we start to see slowing earnings growth in the market? Well, you usually get a hiccup in the stock market. You usually see stock prices down over the next 6 months. Now, they do tend to be up 12 months, so it's a short-term consolidation, but this is just naturally what happens. Markets get a little bit exhausted after that fierce run off the bottom, and I think that's a lot of this.
And Lori, what do we make of the action after earnings last week? I mean, I know the earnings were impressive, but the stocks, Microsoft, Apple, Amazon, they didn't do that much. It kind of reminded me of, you give a kid a big push on a swing and they don't push, they don't pump their legs, and it doesn't do much.
Well, look, I think there's just generally a lack of catalyst. And I think what's really interesting about financials and technology, right, we are seeing a lot of upward revisions in both of those sectors over the last, say, month or so. So it's not so much that the earnings numbers are bad or that the forward guidance is bad, but yet we're still seeing 58% of tech companies have seen a decline of 1% or more after they've posted their prints in that first one-day session. So there's clearly something wrong there. I think it goes back to this idea of slowing earnings growth. We do know a lot of tech investors really get excited about accelerating earnings growth. I think that they're going to be similarly disappointed by decelerating earnings growth as well. And I think, frankly, we've kind of exhausted all the known positive catalysts at this point in time. I think we're starting to peer more into 2022 as a driver for this market, and it's too early to know about a lot of things that markets probably want some certainty on.
Shepard Smith here. Thanks for watching CNBC on YouTube.